Imagine this. A single announcement shakes global aluminum markets overnight. In Quebec, a major aluminum smelter just unveiled a staggering $1.5 billion investment, backed by a brand new long-term power deal with Hydro-Quebec. That's right, $1.5 billion going into one plant. The kind of money that could fund small countries' entire infrastructure projects. Why does this matter? Because aluminum isn't just metal. It's the backbone of planes, cars, and smartphones. Stable, cheap, and green electricity from Hydro-Quebec means this Canadian aluminum isn't just bigger, it's more competitive globally. And then, just as the news hits, another shockwave comes from the south. Former President Trump announces he's doubling steel and aluminum tariffs in the U.S. to 50%. Markets don't have time to breathe. Overnight, the Midwest aluminum premium jumps a staggering 54%, climbing to record highs of over $1,325 per ton. Factories, suppliers, and automakers are suddenly scrambling, caught in the middle of a geopolitical tug-of-war. This isn't just business, it's global trade, energy policy, and politics colliding all at once. And it all starts with one bold $1.5 billion move in Quebec. Stick around, because the ripple effects are about to reach every corner of the world from North America to Europe and Asia. Just when the aluminum world thought it had a moment to catch its breath, the U.S. hammered the market with Section 232 tariffs. Trump's move to double steel and aluminum tariffs to 50% wasn't just a number on paper. It instantly reshaped costs for American manufacturers. Imagine you run a car factory in Detroit. Overnight, the aluminum you rely on for car frames just got 50% more expensive. A material that cost $1,000 a ton now costs $1,500. That's not small change. It's enough to make companies rethink production schedules, delay orders, or pass the costs on to consumers. The numbers tell the story. The Midwest aluminum premium jumped 54%, reaching $1,325 per ton. That's more than half again what it was just a few months ago. Factories are left scrambling, while traders and investors try to predict the next move. But here's the twist. Canada saw an opportunity. Instead of letting the U.S. tariffs dictate the market, Canadian producers started rerouting over 3 million tons of aluminum to Europe and Asia, ensuring their buyers could still get stable prices. Suddenly, the U.S. market isn't the only game in town, and American companies are stuck in a squeeze they didn't see coming. This is where the story shifts from pure chaos to strategy, as Canada begins turning tariffs into a tool rather than a threat. The stakes aren't just financial, they're global, political, and incredibly high. While U.S. factories scrambled, Canada wasn't sitting still. Ottawa took immediate action, fast-tracking multi-billion-dollar smelter upgrades and securing long-term deals with Hydro-Quebec for stable, low-cost hydroelectric power. That's more than just an energy contract. It's a competitive weapon, giving Canadian aluminum a price advantage while also earning low-carbon credits that appeal to environmentally conscious buyers worldwide. Take Alouette's Sept Isles smelter as an example. This plant alone produces 620,000 tons of aluminum per year and employs around 900 workers. With the upgrades and the new power deal, it becomes a global powerhouse, ready to supply Europe and Asia even as U.S. tariffs make American aluminum prohibitively expensive. Canada's move is clever because it combines policy, energy, and infrastructure. Instead of reacting emotionally to the tariffs, Ottawa turned them into an opportunity to strengthen its global position. They're not just defending jobs, they're building leverage. By making their aluminum more affordable, greener, and more reliable, Canada sends a message. If the U.S. tries to pressure us with tariffs, we have other markets waiting, and we're ready to pivot. This is the moment where the story turns from a market crisis into a strategic masterclass, setting the stage for global ripple effects that reach far beyond aluminum. Canada's strategic moves didn't just help domestic producers, they reshaped global trade dynamics. European and Asian buyers, sensing the chaos in the U.S., moved fast to lock in Canadian aluminum at pre-tariff prices. It was like a game of musical chairs. Those who acted quickly secured cheaper, reliable supply, while U.S. manufacturers were left scrambling for alternatives. For American companies, the choices are stark. Pay sky-high prices under the new 50% tariffs or navigate complex international routes to source metal elsewhere. Both options threaten production schedules and profit margins. Meanwhile, Canada is quietly gaining leverage in trade negotiations, positioning itself as a supplier that can reliably deliver green, low-carbon aluminum. This ripple effect extends beyond metals. By pivoting its exports, Canada strengthens relationships with Europe and Asia, drawing investments and buyers away from the U.S. and signaling that supply chain resilience can become a geopolitical tool. The chessboard of global trade has shifted. Winners are the agile buyers and producers who can move quickly, while the laggards, mostly U.S. companies, face higher costs and delays. Canada's strategic pivot demonstrates a key lesson: in a global market, the ability to adapt quickly can turn a crisis into a competitive advantage. And as we'll see next, the stakes aren't just about trade, they extend to jobs, energy, and innovation at home. The impact of Canada's aluminum strategy goes far beyond boardrooms and trading floors. It touches people, energy, and technology. Take the Septiles smelter in Quebec. It employs around 900 workers, supporting entire communities nearby. Then there's the surge in jobs at ports, rail lines, and supporting infrastructure. Hundreds more people are benefiting directly from these upgrades. Energy plays a huge role here. Aluminum smelters are massive power consumers, and by relying on Hydro-Quebec's low-cost, clean hydroelectric power, Canada can produce aluminum more efficiently and sustainably. At the same time, this shift reduces oil demand in the United States Midwest, subtly reshaping regional energy consumption patterns. Canada is also investing in green tech and innovation. EV battery component plants in Ontario are expanding. Hydroelectric projects in Manitoba are attracting investors, and research funding in Montreal, Saguenay, and Estrie is fueling breakthroughs in sustainable aviation fuel, advanced composites, and flight simulators. These investments don't just protect jobs, they future-proof Canada's industrial and technological edge. In short, Canada's $1.5 billion plan isn't just a corporate upgrade. It's an economic engine that strengthens communities, transforms energy usage, and positions the country as a global leader in clean, high-tech manufacturing. Canada's strategy isn't limited to aluminum. It's a broader pivot to global markets. While the United States market grapples with tariffs, Canadian exporters are finding new buyers around the world. Crude oil now flows to Singapore, gold shipments to the United Kingdom jumped over 30%, pork heads to Japan, and pharmaceuticals reach Italy. This isn't just a shift in goods. It's a rewriting of trade routes, reducing reliance on one market and spreading risk. Small and medium-sized businesses are part of this transformation too. Companies from Quebec's specialty drug firms to British Columbia's niche manufacturers are using agreements like CETA and CPTP to break into new markets. By doing so, Canada sends a clear signal. It won't be trapped by United States tariffs, and it won't let one trade partner dictate its economic future. This diversification gives Canada strategic leverage. By broadening its customer base, it strengthens negotiating power on everything from electric vehicle incentives to green energy subsidies. It also protects its industrial core from external shocks. In effect, Canada turns a trade crisis into a global opportunity, proving that adaptability is as valuable as raw resources. Canada's strategy isn't just about producing more aluminum, it's also about moving it smarter and faster. The upgrades at the port of Saguenay are a perfect example. 2 deep-water docks now handle ships carrying over 69,000 tons each, and direct rail links connect smelters straight to ocean carriers. This means Canadian aluminum can bypass United States territory entirely, saving time, cutting costs, and delivering metals to Europe and Asia at pre-tariff prices. The logistics improvements aren't just efficient, they're environmentally smart. Electric cranes replace diesel trucks, and new intermodal yards reduce road congestion, helping meet strict low-carbon transport standards in Europe. These modernized ports and railways turn infrastructure into a strategic weapon, allowing Canada to compete globally even under the pressure of United States tariffs. For United States manufacturers, the impact is clear. While they struggle with higher prices and complex supply chains, Canadian aluminum flows smoothly to international buyers. This combination of green energy, upgraded production, and smart logistics demonstrates how physical infrastructure can be leveraged to turn tariffs into opportunity and reshape global supply chains. Canada's bold moves have created a high-stakes global shift. By turning tariffs into strategy, upgrading smelters, leveraging clean energy, and modernizing logistics, Canada has reshaped supply chains and strengthened its position as a reliable, competitive supplier on the world stage. United States tariffs, intended to protect domestic industries, may have backfired, giving Canada the upper hand in global trade. But the story isn't over. All eyes are on July 21st, 2025, when new tariff adjustments could shake markets again. Will Canada maintain its momentum and continue diversifying its exports? Or will United States policy respond with countermeasures? The outcome could rewrite decades of trade history, influencing global supply chains, green technology, and even energy consumption. Now, we want to hear from you. What do you think will happen next? Will Canada's strategy hold, or will new tariffs change the game? Drop your thoughts in the comments, and don't forget to like and subscribe to stay updated as we track this ongoing global metals showdown. The next chapter of international trade is unfolding, and it's a story that could touch every industry, every factory, and every consumer, from cars and airplanes to the energy grids powering them. Stay tuned, because the world is watching Canada, and the stakes have never been higher.